Out of all the indices, Russell 2000 stood out. Clean price action, hidden setups, and DR levels that practically map the move. In this video, I'll show you how to catch the best aftermarket, overnight, and regular session trades using nothing but DR Basics. Let's get straight into the charts. The best aftermarket DR session trade from last week goes to Euro versus the Australian dollar. If you've watched my previous top 7 trades videos, you should remember what I've been telling you to expect if Euro AUD does one specific thing. Now follow me here with this breakdown. Wednesday started its DR IDR intraday cycle with the aftermarket session closing as a green DR box, where the closing price is higher than the opening price. It's also outside the previous day's regular DR session, excluding a DR range contraction model already. What does a green DR box tell us? There's roughly a 70% probability that a DR long confirmation will follow. Right with the next candle, price immediately confirms that by closing above the defining range high on a 5-minute time frame. Exactly what we need to plan and execute a trade. While the defining range forms, it's your job to already prepare for the session the best way possible. Zooming out to access past price action, you should highlight previous DR session levels that align with the current range. 3 from last week align perfectly. What do they already tell us? They are clustered at the top of the range and at the bottom of the range. So you can already anticipate either a shallow retracement or a deeper retracement reaching into the retirement setup area. From previous videos where I covered the exact setup several times, you should also be familiar with targets for Euro AUD if a long confirmation happens within the first hour. A low-hanging fruit target, if the DR session holds true of course, is considered the +2 standard deviation, while price often even extends to the 3 standard deviation level if the session holds true. So to summarize, you have a green DR box, a long confirmation, previous DR session levels, and a statistical advantage for targets. 10 minutes later, price rejects the IDR high in line with the previous DR session level. That's your first shot for the session, with your stop loss covering at least the closing price here. The closing price in a green DR box is also very sensitive. Price immediately keeps going, hits the target, and even extends toward the +3 standard deviation level that also perfectly aligns with the previous day's DR level. By the way, this didn't just happen in Wednesday's aftermarket session on Euro AUD. It also took place in Monday's aftermarket session, where price offered an amazing retirement setup and extended toward the +2 standard deviation level. With those two trades, more than 10 are possible. Not bad at all, I would say. Let's continue with the best overnight session trades from last week. The first one was presented in Nasdaq's Wednesday overnight DR session with small but crucial details that you don't want to miss out as a professional analyst and trader. The overnight DR session formed from 3 a.m. up until 4 a.m. and closed as a green DR box. The aftermarket and overnight session in this constellation present a DR upside model being intact. But when looking closer, the overnight session expands the aftermarket session in its size by 1 tick. Therefore, not only a DR upside model is intact, but also a DR range expansion model, which could also turn to the downside, forming a trumpet-like price action. But with the green DR box, we get another strong probability already, a roughly 70% chance to see a DR long confirmation. And so it happens, the next 5-minute candle closes above the defining range high. To the left, there's nowhere near a previous DR session level, but some other stuff can be spotted if you look closely. Zooming into the current defining range, there is an open magnetic volume imbalance at the top of the range, lining up exactly with the IDR high and closing price. A little bit lower, 2 volume imbalances that formed during the first hour of the DR. At the low of the range, right at the opening price, there is an intraday gap imbalance. With the long confirmation intact, this gives a nice barrier for price to not turn into a DR false session. With everything set up, you should be ready to strike. Probabilities are high with everything I've covered so far. Price extends toward the +1 standard deviation level after rejecting the DR high and then starts to retrace back into the open magnetic volume imbalance that has been rebalanced now. There was more than enough time, well over 30 minutes of where you could place a high probability trade that offers a potential 5R and stops cover previous volume imbalances as well to target the next standard deviation level. With the 8:25 a.m. candle, the session ends and you could have either closed the position in 2R profit or put your stop at break even to continue holding the trade further. Stunning price action that is absolutely tradable with just the DR basics, and I'm not even adding any advanced stuff here. Another great trade in the overnight DR session was presented in the crypto market. Who would have guessed it? Ethereum is currently very bullish and trending toward the upside. You can take advantage of that, even in intraday's price action. Based on DR models, a DR upside model is intact. You should easily spot that by now. With the overnight DR session being smaller than the aftermarket DR session, you can already exclude a DR range expansion model. The aftermarket and overnight DR session closed as a green DR box, already signaling strength in the market. With that being said, we have a roughly 70% probability for a DR long confirmation. And so it happens with the next 5-minute candle. There's nowhere near a previous DR session level that might support decision making, except the one from the current aftermarket DR session. Highlight that by any means. After almost half an hour, price retraces into the middle of the range and rejects it. It closes back above the opening price, and this is where a potential first position can be entered, targeting the next SD level of 1. With stops at the retirement setup area, this trade offers a solid 3R, which unfortunately would have resulted in a loss. But here's where you might get another high reward trade. Even though price came back below the defining range low, it failed to close below it and didn't confirm a DR false session. It also failed to close below the ADR high levels, which are highlighted in blue here. If you extend the ADR closing price, your stop can safely be placed below it and end the session with 2 trades taken, resulting in a total of 2R profit or even more, depending on if you hold the position further in the DR upside model. The best regular DR session trade goes to the Russell 2000 in its Wednesday regular trading hours, and there are many reasons for it. Out of all indices, this one really presented the cleanest price action this week, and with all that I teach for free on my channel, this should be an easy trade for you to catch as well. All 3 DR sessions that form the intraday cycle form an DR upside model, while all of them closed green, signaling overall strength in the market. When you highlight intraday gap imbalances, you will find great insights and nice rejections off of them that kind of led to upside price action. One daily gap imbalance that supported the bullish price action early on in the aftermarket session, and several intraday gap imbalances that held the upside structure pretty well. Let's get a bit crazy here. To the left, there are no previous DR session levels that align with the current range, since the Russell 2000 hasn't traded at those prices since February this year. But what actually happens when you go back to that time and highlight previous DR session levels and see if they could assist you with decision making? Is the algo still remembering them? Let's check it out. We highlight the high and low of the current range with horizontal lines and go all the way back to February to highlight previous DR session levels. Use the rectangle tool and extend it to the right so it aligns with present price action. Once done, you can already see that these levels had amazing rejections and led toward further upside price action once they were broken. There is no confirmation yet, so patience is key. A few minutes later, price comes all the way back to the IDR low and fails to close below it. This right here is a valid entry point. And inside my academy, I also teach my students how to use data and many other things to your advantage to take high probability trades without even having a confirmation. Let's continue. Price trades higher and follows the overall bullish structure before confirming longs with the 11:25 a.m. candle. Several rejections from the IDR high in line with the previous DR session level from earlier this year. If that's not enough, you have the tick grid indicator as well supporting a trade here. I have a video fully covering this indicator that you can check out if you haven't already. While price rejects the IDR high and previous DR session level for a second time here, tick grid reaches its lows and we have a beautiful divergence in price versus tick. Like seriously, what else do you need for a clean setup? This one is a no-brainer. Price extends even further than 1 standard deviation and reaches almost 2.5 standard deviations at the end of the day. All trades shown in this video could have easily been taken if you've studied my videos in IDR Basics for a longer time now. This trade on the Russell 2000 shows exactly what I always teach in my videos, and if it's presented that way, you should not hesitate to take a shot. If you're serious about trading and want access to way more advanced knowledge and tools, feel free to visit M7DR.com. Have an amazing trading week, and I hope to see you in the next video.
We're gonna take on the world.